Hello, and welcome to the Logistics Management Podcast. My name's Jeff Berman. I'm Group News Editor for Logistics Management Magazine and also the Peerless Media Supply Chain Group. Today, it's a real pleasure to welcome Andrew Sibold to our podcast. Andrew serves as Director of Economics and Freight Policy at the Intermodal Association of North America, also known as IANA, where he serves as the industry's economist and leads IANA's market intelligence program. Andrew is the architect of Beacon, IANA's proprietary freight data platform, and creator of the Intermodal Volume Index, the industry's seasonally adjusted headline measure of North American intermodal activity, alongside a growing suite of fluidity, port, and leading indicators. Andrew's analysis appears in IANA's monthly Intermodal Market Monitor, as well as its weekly flash update, and his commentary on freight markets has been featured in national logistics media outlets. Prior to joining IANA, Andrew spent 5 years as a financial and economic analyst at the Federal Highway Administration and also served as a U.S. Army captain. Andrew holds graduate degrees in economics, public policy, econometrics, and also international relations. Andrew, welcome to the podcast.
Hi, Jeff. Thanks for having me. Great to be here.
Yeah, absolutely. It's great to have you. So, Andrew, let's start with sort of a little bit just about IANA itself. Can you just simply please provide an overview of the organization in terms of its mission slash services and also the types of members that IANA has?
Yeah, sure. So IANA stands for the North American, or sorry, going back, the Intermodal Association of North America. Basically, the National Trade Association for Intermodal Freight.
Yep.
Our mission at IANA is to grow efficient intermodal transportation through innovation, education, and dialogue. We have about 1,000 plus corporate members. These members kind of span the range from Class 1 railroads and short line railroads to ocean carriers to stack train operators, ports, drayage, kind of you name it in the intermodal game, and they're typically an IANA member. Um, some of the core services we offer is the UIIA, which is the Uniform Intermodal Interchange Agreement. Basically, the standard agreement is kind of boxes change hands across the network, as well as, our data products are pretty well known as well, and just the general representation that we provide the intermodal industry on kind of Capitol Hill.
Okay, great, great. So let's jump into just market happenings, if you will, and let's talk about how you're sort of seeing the current state of the market as we look at things like volume as well as service levels.
Yeah, so currently we're seeing a pretty strong year for intermodal. This kind of driven by, two factors that I'm sure we're going to get further into being, the shift from truck to rail, and then also, as of late, a pretty strong import boom, which has been going on with the, data center build out.
Yep.
But overall, again, yeah, we're seeing pretty strong growth. Service levels are remaining fluid, so we're not really seeing any sort of, demand capacity constriction on the network. So really a lot of room for growth here in the future, I think.
Okay, great. And when we talk about demand, obviously you just mentioned the demand coming out of the AI data center build outs. And also, intermodal is often viewed as a very consumer-oriented freight in some respects too. And obviously, the peak season this year, which we'll get into a bit more as we move along, but it looks like it came early. I guess what I'm trying to ask is the current state of demand for intermodal services, would you consider it at a healthy level these days?
Yes, for sure. And I actually am pretty optimistic that it will continue to grow. I think, this morning's job report might throw a little bit
Yeah,
of water on that
notwithstanding,
fire.
right? Yeah.
Yeah, but as long as conditions kind of persist as they are, I think that we had a really strong June, and going into September, October, we'll likely see a pretty historic peak this year.
Okay. All right. Great. And I know you just mentioned the jobs report, and I thought it'd be interesting, Andrew, to talk a bit about the impact of economic conditions on intermodal. So, along with things like employment data. That I mean, I'm thinking along the lines of retail sales, GDP, Federal Reserve interest rate actions, inflation, etc. I mean, manufacturing. There's all kinds of things that factor into it, obviously. But what's standing out to you? What are the metrics that you're keeping a keen, sharp eye on with sort of, that intermodal focus?
Yeah, yeah. So obviously jobs is kind of one of the big ones because it's a leading indicator of demand, right? You can't really buy stuff if you're unemployed or you shouldn't be.
Right.
Um, but there are a few other ones that I think are, pretty well suited for intermodal demand. Kind of as you mentioned, we're largely consumer driven. So GDP is not necessarily a great proxy for us just because so much of our economy is kind of service driven.
Yes.
Um, Inventory to sales ratios, warehousing contracts, those are typically the things that I'm watching to see intermodal. And then obviously like things like household savings, consumer spending, which have been robust, pretty much all across this year. Those are the two big drivers I think that will keep intermodal kind of chugging along here.
Okay. And as an aside, I was wondering, housing starts have been pretty inconsistent. New home sales, it's getting tougher for a lot of people to actually get into and buy a home. Um, if things were to turn around on the housing front, would that represent, in your opinion, a solid growth catalyst for intermodal?
Maybe on like a secondary level, primarily those type of kind of heavy construction, equipment and lumber things typically end up on flat cars rather
True.
than in boxes.
Right.
But housing is a main source of kind of, demand for intermodal as populations grow in certain areas and decline in others. So, we're all kind of linked together in that sense. And I think that if housing were to hopefully start become a little bit more fluid, it pay dividends for intermodal probably on a secondary level.
Sure, sure, fair enough. Um, and there's been a lot of talk this year about a bit of a recovery on the truckload side, Andrew. And obviously, a lot of that is being supply side driven more so than demand driven, based on a lot of different actions coming out of the federal government, as it relates to things like commercial driver license, um, English language proficiency, some other immigration actions, CDL mills as well. It has not been a dull year on that front. So that said, the truckload market seeing that supply side driven recovery as opposed to a demand driven one, coupled with intermodal volumes up year to date, it's kind of an interesting story there. I know we'll get a bit more into it, but how do you sort of, and I think you hinted at this earlier, but with that as a backdrop, how do you sort of view the intermodal volume outlook over the balance of 2026?
Yeah, so I think there's a lot of, kind of on the street view of intermodal and trucking as kind of direct competitors. But for most cases, intermodal and trucking, they're not really direct substitutes for each other. Trucking tends to do really well on those kind of shorter, more, timely deliveries, and, intermodal just really doesn't compete on those. But once you get into kind of the long haul band, that's where you have, intermodal marginally making up quite a bit more. Obviously, due to the sheer volume that's needed there, trucking plays a significant role as well. But, I don't think that a recovery in trucking really has too much cause to like dampen intermodal's growth as well. I think that the two are pretty complementary, and we're seeing a lot of intermodal growth on lanes that are actually kind of smaller in the Northeast and the Midwest as opposed to out west where the length of haul is a little bit longer.
Okay.
And the only thing I can really attribute that to is just labor supply on the trucking for those long hauls, and just the shorter length of hauls being more competitive for trucking, so people can kind of make their bottom line on those rather than having to compete with intermodal on the long haul.
No, it makes total sense. Um, you know, obviously a big topic, Andrew, going back to early last year has been related to tariffs. Um, with the tariff pull forwarding or front loading, whatever you like to call it, activity, those efforts are somewhat in the rear view mirror now as the Section 122 10% tariffs expired late last month. How do you sort of view, I guess, on a general and collective basis, the impact of tariffs and trade policy on intermodal market movements?
Yeah, so intermodal is very dependent on imports, right? Because it's a consumer kind of facing freight, and we're not really manufacturing a lot of consumer products in the United States these days. So all that to say, it's pretty sensitive to tariffs. The thing with tariffs is, they're essentially a tax, and typically in economics, the theory is that when you have a tax, yes, it causes like prices to fluctuate a little bit in a
Mm-hmm.
short run, but then overall in the long term, what it does is it just kind of depresses demand and it depresses labor supply and labor market.
Yeah.
So all that to say, typically we would see a tariff be implemented, prices go up, demand go down a little bit, and then the market just kind of settles into a new equilibrium there. But with the current fluctuations in trade policy, it's kind of prolonging the pain, so to speak. So you have the prices kind of fluctuating, you have demand fluctuating a lot as people try to anticipate those tariffs and pull supply forward. Um,
Mm-hmm.
so this has been somewhat unique in the tariff world where the part of the market adjusting has been prolonged basically over a year-long span at this point, which has kind
Yeah.
of caused it to be pretty difficult for me to kind of say where things are going. But, you know, with the latest pull forward of supply, right? Like I anticipate there's going to be a probably a drop here in July and maybe like a slightly softer August, but I still think that we'll have the historic trend where, we're going to have significant growth here in August through October as we hit
Mm-hmm.
peak season.
Yeah, no doubt. And shifting gears just over to the Iran conflict, how do you view sort of the impact of the Iran conflict on intermodal when we look at things like modal shifts from trucking to intermodal, for example, which has gotten a fair amount of attention, especially it was very noticeable, for example, with JB Hunt's most recent earnings release commentary as an example, as well as fuel savings efforts too.
Yeah, for sure. It's definitely played a role in the shift to intermodal, but I think that a lot of times that role is overstated. Um, like I mentioned earlier, when we see the regions of the United States where the shift to intermodal has been the most pronounced, right? The largest shift, you would think that those would be in, if it were fuel driven, they'd be in places like California, the Southwest, where you have the long length of haul combined with the highest gas prices in the country, just because they're 100% dependent on imports for fuel in that market. But we're actually kind of seeing the opposite. Most of the domestic growth for intermodal has been in the Northeast and the Midwest. Those, usually shorter length of haul between cities.
Hmm.
And that has been the area where the labor impacts have been the most drastic in terms of enforcement on the trucking side of the house. Um, so all that to say, diesel prices are playing a factor, but you know, I think the labor side, the labor supply shortage that's kind of happening in trucking has been the primary driver of that shift. And I anticipate that to continue here in the future. Especially during this administration, right? Like there's no real reason that'll change in the next 2, 3 years.
Hmm.
Um,
Hmm.
and same with diesel prices, right? Like even if we do have a durable ceasefire, the prices of diesel are going to remain elevated just because there's that risk that now has to be factored in.
Oh, 100%. Um, Obviously, a big topic, Andrew, within both intermodal and freight rail circles for more than a year now has been this proposed Union Pacific Norfolk Southern Class 1 merger, which would provide a single line North American rail network. There has been this deal has gotten a ton of attention from both sides. In fact, we just published a story earlier today online about a group of five different shippers coming out against the deal for various reasons. Um, but do you think that this proposed merger could benefit intermodal? And if yes, why? Pretty kind of standard up or down question. If yes, why? If not, why not?
Yeah, yeah. So I will put a caveat in this that that we are the association for pretty much all parties of that deal. So,
Yeah, yeah,
take everything that I'm saying with a relative grain of salt.
yeah, yeah.
Um, but I can say that, when I've looked at big mergers historically, right? Typically what happens is there's kind of short-term service risks. So, disruptions as, they're trying to integrate their systems. People don't really know, who's doing what. But this is usually balanced by long-term network benefits. So, there's less friction as supply flows basically across the entire country. So that could be a huge benefit going forward. You know, as people are able to just kind of have a one-stop shop for these things.
Yeah, yeah, no doubt. I mean, there's there's definitely a ways to go before we get to any type of I guess definitive verdict on that deal.
Yeah.
Just based on the way things have been moving, and that's understandable. We had talked briefly about peak season earlier, Andrew, and I'd like to get your take on just how you view the 2026 peak season from an intermodal perspective.
Yeah, so I think this June was pretty historic in terms of volume, right? It's certainly
Hmm.
the strongest month this year, and this year has been the strongest year in quite a while. So I think a lot of people are thinking, well, we just had an early peak. It's in June. But I still think there's so much more room for growth in intermodal as we kind of move into the historic peak season that we'll see even stronger months here on the horizon. Like I said, in the near term, I imagine July and August will print like a little bit soft, but definitely not negative. But then as we move into peak season, we'll still see that strong, demand boom. And then we also have been seeing kind of late developing booms in December, which is interesting. It'll be interesting to see if that happens again this year, or if that was just kind of recovery from the pandemic disruptions.
So yeah, and that is interesting. So like that December boom that you just mentioned, what was that emanating from, if you will? Like what were the reasons behind it?
Yeah, so I don't have like full data on, causal effect for that, but
Right.
my intuition is that a lot of it is just, supply pull forward and some like immediate restocking.
Okay.
Um, just because there was so much disruption from tariffs, I think a lot of suppliers would rather sit on full stocks as in their warehouse than wait and when they need it, be hit with, a 25% tariff.
Yeah.
Um, so yeah, I imagine that'll eventually fade here in the future as the tariff policy hopefully gets ironed out, but
Right.
we'll see.
So like that type of measure though, that would give the stakeholders, the BCOs, a bit more control and or certainty, if you will. Because I know the certainty has been lacking a bit over the last 16, 17 months, especially from a trade front, right?
Yes, for sure. And I think that, that certainty is gaining in price, right? So people are willing to pay a higher premium for that certainty rather than take the risk on the uncertainty.
Okay. Okay. Got it. Got it. Um, so this has been a pretty interesting topic of late, is just simply what needs to happen for more shippers to quote unquote buy in to intermodal in order to increase market share. And as a follow-up, do you think previous service issues have influenced reasoning on behalf of some shippers for perhaps not making the committed switch over to intermodal?
Yes. So I would say that, the legacy service failures for sure had a significant impact. Kind of as we were just talking about, right? That certainty aspect is worth a premium as well, rather than just, saving a few bucks on the margins with greater
Yeah.
uncertainty. Intermodal is very contract driven. So, unlike trucking, it's not a super efficient market from like an economic standpoint. And what that means is that people don't immediately or aren't able to immediately respond to price changes. They kind of have this lock-in effect where, it's more flat in terms of peaks and valleys. On the one hand, that is tough, right? Because people can't shop around as easily. But on the other hand, when you do have uncertainty, especially kind of as we're seeing in the present, intermodal provides that certainty. And I think that is also driving a lot of folks to intermodal. And really, intermodal is kind of in charge of its own destiny right now. As
Hmm.
long as we can continue to provide service, good service, and we don't try to, follow trucking on the pricing spikes, I think that intermodal has as long-term room for growth, especially, as people try to price in that certainty effect, and they'd rather have that than playing around in the spot market.
Okay. Yeah, that makes total sense. Um, so one thing, Andrew, that I didn't have on the outline that I wanted to ask, and I could be way out of left field here, but I thought I'd throw it out there anyhow, just because everyone it seems like within the supply chain in one way or another is being impacted or influenced by AI. Is there any AI carryover that's visible or tangible in your opinion within the intermodal market?
So I would say it's not really super relevant in the data other than the AI data center, build out has driven some volume in intermodal,
Okay.
especially on the import side, right? But I think going forward, it will, start to show up in the data in terms of just efficiency gains is usually what you see. I think there's a lot of fear in the market right now about, there's going to be mass unemployment and stuff going on
Hmm.
with AI, and basically every time we've seen a general purpose technology, be it, the internet, the telephone, those type of things come online, there have been some labor market disruptions, but like the long-term growth of new jobs in those sectors has more than outweighed the job losses.
Okay.
Um, yes, on the one hand, there's going to be some disruptions as people kind of figure out where it fits, but I don't think that, all these doomsday scenarios that people are kind of shopping around out there are anywhere remotely close to what will actually happen. I
Okay.
think if anything, you'll just see a more efficient network, as people are able to kind of track goods more in real time rather than, you know, black boxes where they just kind of send it out there and it shows up a few weeks later.
Okay. Makes sense. Makes sense. And Andrew, I wanted to just jump back to something in your bio, as it relates to IANA, and that was simply the two publications that you guys put out, uh, that I pay close attention to myself. One being the Intermodal Volume Index, and the other one being your monthly Intermodal Market Monitor, and also the weekly flash date. Can you just please tell us just a bit about each of those on a top level, kind of what their objectives are, the type of data you're researching and culling within those respective publications?
Yeah, yeah. So the Intermodal Volume Index is our newest addition to the family, so to speak. It's basically intended to provide a snapshot so that people can kind of see at a glance, what's happening in intermodal trend wise. Is it going up? Is it going down? And kind of how we achieve that is we take our proprietary data that tracks intermodal moves basically within the borders of North America and indexes it to a pre-pandemic level. So, we kind of iron out the pandemic disruptions there. And then we report without seasonality what's happening, right? So when we say it's the intermodal index is at 103.2, what we're saying is that it's 3.2% above that historic baseline. And that's taking seasonality off the table. So what you're seeing there is like real growth, not just, an exceptionally strong month due to historic patterns. And then our monthly update kind of goes into more detail behind that, kind of what's driving these markets, what's causing cause and effect of what's going on, as well as, a little bit into the future of like where we expect things to end up in the next few months, in the next quarter. And then the flash updates just basically only looking at rail data in North America, saying, here's what's happening, here's likely the cause of that, and here's what we think that's going to play out throughout the month.
Okay, got it. And then in terms of frequency, the Intermodal Market Monitor is monthly. And what's the frequency of the IVI?
Yeah, so that's monthly as well. We
Okay.
typically release that at the start of the month, and basically it's a nowcast based on some of the econometric models that I've built. So, typically the ETSO data is about a month behind, but with the IVI, you're actually getting a real-time look at where we anticipate the month to land.
Okay.
And we're, I think, the only shop that's doing that. So,
Okay.
plug there as well.
Yeah, no, that's
Um,
great. It's great.
so the whole thing is to make it useful for folks in operations so they can have a good idea of what's going on.
Yeah, no, that's excellent. I do get your data on a monthly basis. And the last batch I have is through June, and I just wanted to share it with the audience just to give a sense of where things stand on a year-to-date basis. Your total volume units for year to date through June were 9,365,178 units. That represents a 2.5% annual gain year to date. And all your areas, that's trailers, domestic containers, all domestic equipment, which is comprised of the containers and trailers, they were all up. The only and Trailers were up 2.8%, with domestic containers and domestic equipment in close territory at 7.4, 7.2% respectively. The only grouping, Andrew, to see a decline was ISO containers, down almost 2% at 1.9%. And I just wanted to see if you could, before we wrap, if you could just provide a little clarity on what's pulling the ISO levels down.
Yeah, so that is almost 100% caused by the import softness that we've seen throughout the year.
Okay.
Especially in the first two quarters of the year, we really saw imports, not doing so hot. It's rallied a little bit. I think June and now July will show pretty strong imports as there was that pull forward ahead of those tariffs that you mentioned that got enacted late last month. Um, but overall, demand for imports has been relatively soft this year, and that's kind of caused ISO containers to be a lot less than they normally are.
Okay, makes sense. All right. Well, Andrew, listen, this has been great. Brings us to the end of our allotted time for today's podcast. So, on behalf of Logistics Management Magazine in the Peerless Media Supply Chain Group, I'd like to say thanks for spending some time with us today.
Yeah, thanks for having me. Always happy to be on.
Yeah, absolutely. And then we look forward to having you back in the future. For those of you listening in, uh, please feel free to go ahead and connect with Andrew on LinkedIn. That's simply linkedin.com/IN, another backslash is Andrew dash Sibold, Sibold, followed by another backslash. And also, IANA, or the Intermodal Association of North America's website, is simply intermodal.org. I encourage you to check it out and go learn more about the organization. They have a bunch of great resources there. And for those of you on Twitter, please feel free to go ahead and give us a follow at Logistics Management. That is at Logistics MGMT. And also, for those of you that are not currently subscribed to our podcast but would like to do so, just simply punch in the Logistics Management Podcast wherever you find your podcast and it will pop right up. Thanks, everybody, and have a great day. We'll catch up with you next time.